Hello, and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, November 5th, 2008. The Australian services sector contracted for the 7th straight month in October, falling to 42.1. The decline was broad-based, as only one of the 9 sectors, communications, showed growth. Australia's housing market is also feeling the lack of credit pinch. Building approvals have been on a downtrend since peaking in December of 2007. In September, the number of total dwellings approved plummeted by 7.2% on a seasonally adjusted basis, bringing the year-to-year change down by 21.6%. It's the 3rd straight month of declines and brings the data to its lowest level since April 2001. Australia's exports beat out imports for the month of September, bringing the trade surplus to 1.46 billion Australian dollars, which exceeded economists' expectations. Exports rose 8%, while imports rose 7%, and the better-than-expected overall figure was the highest level since June of 1997. The Aussie yen fell in Asian trading, testing the area around 67.80, which was resistance last week and on Monday, but has now turned into support. Markets in Tokyo and Sydney were both up, increasing risk appetite, as investors hope the victory of Barack Obama may reinvigorate the world's largest economy. If the levels around 67.70 holds and global stocks continue to rebound, the Aussie may be able to hold on to its gains from last week, as there are some signs that the worst of the financial crisis is behind us. In the UK, the nationwide Consumer Confidence Index rose to 55 for October, which is 4 points higher than the September index. Consumers are feeling a bit of a reprieve from the government's actions to contain the credit crisis. The biggest improvement was in the Expectations Index. UK factory production fell 0.8% in September, following a downwardly revised 0.6% decline in August. The 8.8% drop was the worst in 19 months, and it makes the 7th straight month that output has been negative. The UK services PMI undershot expectations, showing larger-than-expected contraction in the sector. The 42.4 reading is the lowest this survey has been since its inception 12 years ago. Services account for 74% of economic activity in the UK, and such a steep slowdown may pressure the Bank of England to cut rates by a larger margin than the 50 basis points expected tomorrow. The services sector PMI in the Eurozone fell to 45.8 for October from 48.4 in September, the weakest the index has been in the survey's 10-year history. Today's final version came in a full point lower than the preliminary release and adds extra weight to the argument that the Eurozone is in recession. It was the 5th month that services were in contraction. Tight lending conditions have crimped business activity, and companies slashed prices to try and lure gloomy consumers. Eurozone retail sales fell 0.2% in September as consumers cut back spending in the face of uncertainty regarding the global financial turmoil, which took place towards the end of last month. Sales were down 1.6% on the year, the 5th month out of 6 that the annual rate has been negative. On a bright note, both the monthly and annual rates did beat forecasts of even steeper declines. The euro-pound pair fell overnight, also testing a key level of support around 0.8045 that had been resistance earlier in the week. From here, the New York afternoon session saw the euro pair its earlier losses, and the pair approached its intraday high near 0.8160. The pound yen stuck within a downward channel this session, turning back at the 160.80 level, where it set an intraday high around 11 a.m. Eastern Standard Time. Overnight, the pair fell as UK news was poor. Still, today's low did not test yesterday's low. In the U.S., the ADP report showed the economy shedding 157,000 private sector jobs, led by a sharp fall in the goods-producing sector. The figure was worse than expectations and casts a dark cloud over Friday's non-farm payroll report. In a second piece of poor fundamental news from the U.S., the ISM non-manufacturing index, which measures activity in the services sector, fell to 44.4 for the month of October. The euro-dollar pair fell overnight to its 50% retracement from the rally seen in the middle of last week. However, New York trading saw the euro rebound and rise to 1.31 as the dollar was pressured by a drop in U.S. stocks and the poor fundamental releases. With the Dow Jones Index down more than 300 points by 3 p.m. Eastern, The dollar-yen pair gave up its gains from yesterday, unable to mount a rally after hitting support near 98.25. Yesterday, stocks had their biggest election day gains in more than 2 decades, but now investors look beyond President-elect Obama's win to the dismal state of the economy and the potential for a deep recession and the remaining fallout from the global financial crisis. The news of more job losses and weaker services weighed on traders' sentiments. Tonight, we get employment reports from both New Zealand and Australia, along with Bank of Japan's meeting minutes. Overnight, Germany posts factory orders, and the UK releases the Halifax House Price Index. Early tomorrow morning, both the ECB and the Bank of England will decide on interest rates. Both were expected to reduce by 50 basis points, and investors will be watching carefully if the recent data causes policymakers to cut by more than that. Also tomorrow, the U.S. will release its weekly jobless claims figure and data on labor costs and productivity. And that wraps up today's newscast. Thank you for joining us here at CMSFX.com, and happy trading.